Happy Monday, traders. It's 8:01 a.m. Chicago time on Monday, the 27th of June, 2022. This is episode number 2260. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. First things first, let's just do a quick mic check. Make sure my voice is nice and silky for you. That's sarcasm. Let's take a look at where the market's at this morning. Looking at the Convergent Trading pre-market summary sheet this morning, we have a market that's in a mild risk-on sentiment. The DAX leading the pack here this morning. The S&P, the Dow, the Russell, the NASDAQ, all up between 12 and 26 basis points on the session, just slightly higher than where we closed on Friday. The expectation for the overnight session here is pretty much in line with what would be what we would have seen normally. Friday had a very bullish close with settlement just a handful of points below the high of the session on a gap and go day. We'll review that in a minute. And so the expectation is that we would continue to explore higher on the reopen on Sunday because, auction rules state that clearly with an auction closing like that, time being the factor that stopped the auction from continuing, it'll likely continue to advertise higher prices to find those sellers. And I'm not sure if it did. So that's where we are. Mild risk on this morning. As far as key earnings, nothing pre-market. After the close, we're going to be looking for Nike, which kind of dovetails pretty nicely with today's announcement. Nike is expected to announce 81 cents per share and $12.07 billion in revenue after the close. The other one is Concentrix, expected to announce $2.84 a share and $1.58 billion. What is driving the news flow this morning? The event risk. We have a few things. The G7 summit. Also, China has taken positive steps to shift its approach to COVID. This no tolerance lockdown that they've been in, which is impacting supply lines throughout the globe. There seems to be some kind of lifting of the rules that will go into these further lockdowns because it's hurting them, it's hurting everybody. The market's still pricing in easing of monetary tightening forecast and inflation expectations. This is basically what has driven things, or what's being attributed at least to what drove things on Friday. You and I both know that despite the macro view, the technicals were saying that we are likely to have a push higher on Friday. We did. As far as scheduled news events, we did have durable goods this morning, a key number. Durable goods came in at 0.7%, expected at negative 0.3%. A huge 1% swing there from the forecast. Durable goods orders coming in pretty strong this morning. Durable goods orders ex transportation came in at 0.7% versus plus 0.2%. We do have pending home sales at 10 o'clock. This is not a high tier number. Expecting these to fall about year on year 10% or so. Dallas Fed, also a low tier number. And then ECB's Lagarde at 2:30 Eastern. ECB, and then we have the G7 summit going on. They're talking about an infrastructure package across the G7 to counter some of the infrastructure improvements that China's doing. Given that it is Monday, I'd like to spend a couple minutes to talk about the rest of the week. Tomorrow, we get the GfK consumer confidence number out of Germany. On Wednesday, we get consumer confidence out of Japan, inflation rate out of Germany, ECB Lagarde as well on Wednesday, Bank of England's Bailey on Wednesday, Fed's Chair Powell on Wednesday. This is a bit of a conference, a lot like Jackson Hole here in the U.S., but this is for Europe, and Fed's Chair Powell is speaking. Wednesday night, we get the Chinese MBS manufacturing PMI. Thursday, we get the inflation rate out of France, unemployment rate out of the EU, personal income and spending. These are important now. Personal income and spending on Thursday afternoon, Thursday morning. ECB's Lagarde again. And then we get the Tankan Large Manufacturers Index out of Japan and the Keikshin Manufacturing PMI out of China. Thursday is a busy day. Wednesday, Thursday, busy days. Friday, we get the inflation rate out of Europe and ISM Manufacturing PMI out of the U.S., which is a market mover expected at 55. So that's what's happening this week. So today, tomorrow, really light in terms of scheduled events. We still have to pay attention to the news, and that's where that stands. Crypto's still sitting sideways. The Bitcoin is trading in a range between 20 and 22,000. A far cry from the high of 68 or 65,000. Ether, same thing, was up at the 4,000 mark, still hanging out at $1,100. The S&P, turning our attention to the S&P, the market condition is balanced. The profile is balanced in the overnight session. 233,000 contracts traded, which is well within the first standard deviation, statistically speaking. A little bit higher than what we would expect and what is common for the overnight session at this point, which is around 170,000. The inventory is only 39% long, 39% long. Much of the trading has occurred above the prior day's settlement close, so we expect the inventory to be positive, but it's not really positive to a point of imbalance. The range is 52.5 points, so that tells us that today is likely to see some action. Pretty good rotations. The point of control has shifted dramatically to 39.25. Okay, so that's what we've got. Looking at the big picture here, switching to the technical view versus macro, we had talked quite a bit. I don't want to repeat myself too much. We had gone from this is balance. We had an imbalance right here on this drop, this gap down overnight. We had an imbalance. We closed pretty balanced on this particular day here. And then we reopened and we traded in balance. So we created balance here. Then we created, so this is balance, not 13. So then on the 21st, I believe, on the 21st, we created an imbalance right here on the gap. And then we finished imbalance. Then we were out of balance coming in the following day, the 22nd, and then finished in balance. So we could see that, boom, we've got huge amounts of balance here. If you recall, the number was 37.75. And so here's another day of balance. So this is balance. And what we had talked about at the end of this day is, hey, look out. There's this double top here. There's this double top down here. It's been putting in double tops and breaking through. We're opening in a gap the following session. So if it does not close that gap zone immediately, then it's a gap and go situation. And the target that I had, a modest target, was the gap mid, which was at 38.70 from about 38.30. That's what I was expecting on scenario 3 on Friday, and this thing really ripped. I found that just a commentary. So balance up here, imbalance, the gap, imbalance. Then it tried to balance out here, couldn't do it. We further imbalance through the gap, balance, imbalance, balance back. So this is a reversal. This is a rounded bottom. This is a reversal, and now imbalance to the other side. So I did talk last week about the fact that we had these double tops forming, and we are likely to break higher into the end of the week. Again, not trying to say that I'm right or that you should listen to me, because really you shouldn't listen to me. You should just check your work against what I'm doing, and then listen to the market. It's what dictates what's going on. And so we were looking for this imbalance, and we are back up on here. So there's a lot going on in this area. I could spend a good hour talking about what's happening here, but I don't want to do that. On Friday, here we go. Let's take a look at this again in another way. There's high, double top, break higher, pull back, try to pull back into balance. Rejected right at the open, push up, put in a high at 38.0506, put in another double top, 38.0506, and as I had outlined, I think Thursday or Friday, look at these higher lows, higher lows, higher lows, higher lows. This is what's called one-time framing up, okay? And we are still one-time framing up. On the daily, the trend is firmly on the side of buyers. We did break last week's high, so we ended the one-time framing down on the weekly. And as I had said, that once that happens, we expect a strong push. We ended up with a push right on the open. And then the open really didn't afford very many good setups on Friday. There was one at 38.37 down here, right at the open, right in here, very, very tight, and 38.47, I believe. And then from there, it went into like heavy chop for the European close and into the afternoon. And then, this coil ended up breaking to the upside, which isn't a shock, and pushing quite a bit. Last week, let me look back at my notes from the Convergent Trading chat. Last week, we had 225 points of range for the week in the RTH session. This is an outstanding figure and is likely a further indication that the intermediate low of 36.39 below, this low way down here, is there to stay a while. Very bullish closing that the settlement was just 3 points below the high. Settlement was 116.5 points higher than the prior session. That is also outstanding. This is unusual. Essentially, what I'm trying to point out here is very unusual behavior, right? We want to pay attention to impulses or situations where the movement is unusual, because the opportunity occurs, in my experience, after the unusual behavior takes place. There's generally an opportunity for that to continue or for us to take advantage. We can't tell when the unusual behavior is going to occur, but sometimes we can, but most of the time we can't. So we don't want to project our expectations on this thing, but when they do, it creates, impulses create impulse pullback opportunities, and so on and so forth. So this is quite methodical here in the overnight session. But here's what we should take away from where we are. What we should take away from the overnight session and what it's telling us is we have run away and tested 39.50, the mid-century figure. Okay, so the 50s are important. In case you haven't noticed, I talk about the mid-century and century figures quite a bit. We pushed the mid-century, pretty clear dry up there I'll show you the volume delta chart to show that. And then what we've done is we've created what was a multi-distribution profile, but really it is just a balanced profile now. The point of control right in the middle of the range, right here. The point of control is whatever it is, 39. What is it now? 39.25. That's where the point of control is. And what we have is, so let's switch. What we have is a point of control at 39.25. We have the full session VWAP at 39.24 and a quarter, and we have the full session mid at 39.2175. And the high on Friday is at 39.19 and a half. So we're opening just slightly higher in a gap zone from where we were on Friday. And we having tested 39.50 from 39.19, we pushed 39.50. We've pulled all the way back, and here we are, right in the mid, in a small gap up, right on the mid and the VWAP of the session with the overnight point of control overlaying that. Again, we've seen this again and again, and I know I sound like a broken record when I say, what does that mean? So pop quiz. What does it mean when the market is opening in a gap or opening in a range where we have a confluence of the full session VWAP, full session mid, and the overnight point of control? What should we expect? Coming into Monday after such a big up day, knowing that we have relatively weak structure from the 38.98 all the way to the high, to me, this looks like we are likely to just rest up, and many of you are guessing chop, and the answer is chop. The market is imbalanced. It has compressed in the overnight session. It's trading in a range where the mid VWAP and the overnight point of control are in the same spot, and it's likely to create, because it's out of balance, because we're in a gap, it's likely to create a quick whipsaw back and forth chop on the open. So another day where it behooves you to just wait and see where the first big rotation is. Until that first big rotation takes place and the first impulse takes place, you're really just gambling. You have, at best, you have a 50-50 chance, most likely less than that, more like 31% chance or something like that if I was to toss a coin and just pick a random direction. So to me, most people think if you pick a random direction in the market that you should have a 50% win rate. And I'm here to tell you that a 50% win rate in finance, it requires a whole lot of effort. So it's not 50-50. It's more like a random coin toss over a large sample yields historically. And again, past performance is not necessarily indicative of future results. Yields somewhere around 30%, 35% win rate. And in that situation, that's what you would be participating in if you traded off the open, unless, of course, your trading plan says that you should. Mine does not. So this is the first expectation this morning. The key element here, I'm expecting this thing to pull back and to check its base. And that base will be in the 38.98 to 38.90 area. So I expect a retest of the century figure at 3,900 this morning. We'll see how that goes. And then I expect, and if it does test and run out of steam, then it's likely to build this strong point of control here. It's likely to build that, and we're setting up basically for a new value zone. So if I go to the TPO chart, this is basically me telling you that it's likely to move from where it is now, 39.26, down here, and build this up, essentially build new balance right in here. We have pushed into this island day here, but we have we're likely to come off. We've built value down here. So as I posted in the Head Trader channel yesterday, I posted this big chart. I'm probably oversharing, to be honest with you, but this is what I posted last night. This is a 4K resolution chart of how I see things, and I'm expecting this. I'm expecting the market to just balance right in this zone between the key magnet and the over under. So between 38.06 all the way up to 3900 or so, 3911 or 3919, 3920. I'm expecting us to be in here this week. And remember, this week takes us into quarter end, right? So it's the end of June, month end, quarter end, and first half of the year. So expect Thursday's close to be very turbulent. Expect Thursday's close to bring in quite a bit of volatility, and that's the biggest idea I want to leave you with. So this for today, looking at the chart here for today, the first LIS or line in the sand or over under is going to be right here. This retest of this 39.31. I want to see how it behaves on the retest from below. Again, this comes from here, here, here. This is the low volume node. We are, again, have the full session VWAP, full session mid on top of the full session point of control. And I want to see, does it come back up, consolidate, pull back, and continue higher to finish Friday. I expect Friday's high to be taken, by the way. Friday's high is very likely to be taken. And it already has. So I expect that to form some sort of a base below us initially. But overall, I'm expecting this thing to pull back, push higher, and then fail back into Friday's range and potentially work itself back to 3,900 for it to settle back down at the point of control from Friday at 38.90 and then consolidate there. That's the main trade idea. If the main trade idea is wrong and we see that early, it creates an even greater opportunity for a long into 39.50. And then projecting the day's range, we're looking at a push potentially, believe it or not, all the way up to 39.80, 39.90. So 39.80. So if we have another driving day, 39.80, 39.90. But for now, I'm expecting us to just wobble around until we fall back into 3,900 and get back into that bounce range that I had talked about between the magnet and the over-under line. Again, we're at the quarter end. There's been quite a bit that happened here, and we have some real excesses in the weekly range. We have a really strong excess in the settlement to settlement range on Friday. It seems frothy or overdone based on historical probabilities. Okay, so I'll leave you with that thought. Before you go, I want to remind you that on Wednesday, we're doing another Futures Radio Show segment. We're going to have John Magneta on. He's a guy that I was trading at, equities with at Schoenfeld down in Boca Raton a long time ago. It's almost a lifetime ago. But we're going to have Jared Tendler on. Jared's giving away one of his courses, his coaching courses, to a winner. We're going to be drawing for that. We're drawing also for some Air Jordan merchandise because that's what Crudelli likes to wear whenever I see him. He's got these fancy high tops. So we're going to give some away. But tune in. That's at 12 o'clock. To get more information and to enter your name for the drawing, please go to edgeclear.com/deli. edgeclear.com/deli. I'll catch you tomorrow morning. Take care, everyone.